What's up, you guys? Zoeb here from OneGlanceTrader.com, and welcome to part 2 of my candlestick pattern trading crash course. And if you're brand new to this crash course, you can click the link in the description, which goes through parts 1 to 6 playlist all together, so you can watch the entirety of this series all the way through. Now, in part 1, we went through the global settings of my very own indicator, the OGT Price Action indicator, which this course is kind of built on. And the indicator is absolutely free. You can pick that up. Link is inside the description. And what we're going to do in parts 2 to 6 is go through each one of the settings or candlestick patterns in the OGT price action indicator to let you know how I personally trade it and what the settings are. And like I said, the part 1 in terms of the global settings just looks at all the other kind of global features in terms of alerts and whether you want to trade with the trend, etc., etc. So if you haven't seen that, go check out part 1. So before we go into the settings of the indicator around the pin bar, I just wanted to give a quick overview or recap for everyone in terms of what the pin bar actually is and what it actually looks like on your chart. Now, the pin bar is considered as a rejection candlestick pattern, and there's two types of pin bars, a bullish pin bar and a bearish pin bar. And as you can see from these images, a bullish pin bar has a very small body, has a long lower wick and a small to no upper wick. And in this textbook example, there is no upper wick. And the bearish pin bar is the exact opposite. So it will have a very small body as well, have a long upper wick or a small to no lower wick. And as you can see, when price is either retracing or trending in a particular direction and you see a pin bar, it's showing that in this particular bullish example that the bears took price all the way down to this level, and then the bulls came in and closed near the open, leaving this very small body and this big wick. And this wick there is again signifying the rejection and therefore price to continue or to reverse in the opposite direction. So that's the theory of the pin bar. Not all pin bars, as with any trading strategy or candlestick patterns, works out that way. But again, this indicator takes all the guesswork out of it and prints pin bars for you on the chart. So let's go into sorry, the actual settings of the pin bar. And this is probably the biggest settings because the original version of the OGT price action indicator, version 1.0, only had the pin bar settings in, and future versions had all the additional candlestick settings. So just to go through in detail kind of what the settings are, what they mean, and then we're going to go through as we go down the list in terms of how we would potentially set it up for a trending situation and how we will set it up for a counter trending situation. And the way you set that up, as I went through in part 1, in the global settings, there is a MA filter section of where it will only show signals when you are in a trend, and it does that through a various selection of exponential moving averages, and I go into that all in part 1. So the first setting, bars to draw, and all this setting is the number of bars to check to see if there was a pin bar that was valid based on the settings that we're going to go through in a second. And again, because it was the first one, the way I did it, you have to actually physically type in how many bars to check. So I've just put 20,000 in there, so enough bars, whatever time frame you're looking at, just so you can do some visual back testing with it. And the next one is the quantity of previous candles to check range. And basically what this means is we really want to show a pin bar that is, big in certain regions. And when I developed this, I used Walter Peters' book, The Naked Forex, to kind of build the foundations. And in his rules, he sets that the pin bar must be bigger than the 4 preceding bars, and the bigger, the more reliable the signal is. So as you can see on the counter trend perspective, is at a minimum, and again you can set this to different whatever you want. I've set, in my personal view, I like to use 4, because I just like to keep with Walter Peters' kind of rules. However, when I'm trading with the trend, and you'll see this in the examples, um, I don't mind having a smaller pin bar. And the reason why that is because you're trading with momentum with the current trend. You just want to see a rejection, a retrace rejection, which we'll go into in the next slide, of that particular example. So I personally like to have two. You can have four, you can have six, you can have zero, whatever you really want. But this is what I personally use. Now, the next sections is you can actually set in points how big you want the upper and lower wicks to be. And again, I personally don't use them, which is why for the buy and the sell, the wicks are zero. But you can do that. So if you want to have an upper wick that is, 20 pips, so 200 points, you can set that in here. I personally don't use it, but it was put in there because of feedback that I've had, and it's again, I know some people that do use this, but I personally don't use it. But again, it's there as a feature if you would like to use it. The next bit over here is the bit that distinguishes, or what I believe sets this indicator apart from a pin bar perspective than any other indicator out there, is Walter Peters' concept room to the left. Now, I've created a dedicated video to room to the left, and I'll link to that in the description and in the top right corner, which goes into it in a lot more detail than I'm about to. But at a very high level, what it's looking at, and I'll talk from a counter trend perspective, and again, it'll be a lot clearer when you see the example. What room to the left is Walter Peters' concept that, let's just say we've got a bearish pin bar. So if I go back a slide here, you've got this pin bar over here. What we're looking for is a lot of room to the left, i.e. where no price action has been for a very long time. The longer, the better. And what the setting does is it looks at the proportion of, for a bearish, the upper wick, and the lower wick for a bullish. It's saying 5% is the current settings. Oh, gone a bit there. 5% of the upper wick, so it'll probably be about from there to there. When was the last time price was at that level? And it will just go back as many bars until price has been hit. And what we're saying here is only show me a signal where the minimum number of bars ago was 15 bars for the time frame. So in the example, in this particular example, let's say we are doing a 1 hour chart. It's saying look at the top 5% of the upper wick for a bearish pin bar, and if price has been there between candle 1 to 14, I'm not interested, because I want a lot more room to the left. And anything 15 and above, and it hits the rest of the rules, it will then print to say that this is a bearish pin bar. And again, I strongly suggest that you go through the video, and hopefully it'll make some sense in a couple of slides when we go through a particular example. So when I'm doing counter trend trading, and I love this strategy on higher time frames, I think it's absolutely brilliant. These are the kind of the settings that I use, because the bigger this number, the minimum number of bars, the better. Now, when we're trend trading, I actually set this to 1, and the reason why that is because if you think about it, if you are trading pullback, so I like to do pullbacks and trends for using a pin bar, so rejection at a pullback, there'll be a cluster of bars really close together, and therefore I'm not really fussed how much room to the left, because I'm not counter trend trading. I'm going with the trend, so I don't expect there to be a lot of room to the left, because if you think about this example here, as price retraces in, the room to the left, there could be bars that are bigger, but still it's got a bit of a pullback, and you'll get this in the next slide when we kind of go through it. So that is really the concept of room to the left, and the bigger the number for counter trend, the better. In my view, it's not that much of an issue or a criteria for when you're trend trading. And the last setting is the colors, and again, you can, if it's a bullish pin bar, you can have it green, and red if it's a bearish pin bar. And again, you can set those to what you want. So again, these are the settings I have. Let me know in the description, or drop me an email if you've got settings that work for you. I'm always looking to see what other people do. So here's a particular example of a trend trade. So we've got two price action or two bearish pin bars over here. And what is denoted by a pin bar, or what prints, is a number on top of each pin bar. And what that number means is the room to the left. How many bars ago was 5% of the upper wick in this example touch price? And you can see here 1, 2, 3, 4, 5, 6. So this bar over here, 5%. So of that wick, last touch price 6 bars ago, and we are on a 5-minute chart, so that's what 30 minutes ago. So last time price was at that level was 30 minutes ago. And you can see in this example, because the answer or the number is 6 with the trend trade, you can see here what happened with price, and you can see why that you don't want a lot of room to the left, because you won't get many signals if you're trend trading this particular thing. So in this particular example, the reason why this is a very good signal is that we've got a bearish pin bar signal with the trend, so with the EMA. So again, as I mentioned in the part 1, these are the EMAs, the 30 to 60 EMAs, all pointing down, all in the right direction, and the momentum is to the downside. So we've got going with the trend, so we're looking to go short. We see a rejection candle. And the next piece there to really take away from this when I talk about confluence strategies is look where the pin bar was printed. It was printed on a 00 round number level. Now I've got an indicator, the OGT round numbers indicator, which I'll link to in the description, and you can check out that tutorial video in the top right corner. But effectively, round numbers are natural support and resistance levels. Now, and price reacts to these levels. So what you can see here is we've got a downtrend clearly identified by the EMAs. We've got a rejection pin bar, and price rejected that 00 round number level. And then look what happened to price. Price then continues to fall. So when this signal developed and I got a push notification on my phone, I then looked at the chart. Obviously, I knew it was with the trend because that's what the filter I've set. And we've got this lovely pin bar on there, and it has to be bigger than the last 2 bars as well. So it's bigger than the last 2. Don't think it was bigger than this particular bar. But again, I'm not really that fussed about the size of the candle. And hopefully that kind of makes sense. And then just touching on this particular bar as well. Again, this is a pin bar that is obviously with the trend. It is printed on a round number level, another 00 level. Oh, this is based on a 50 level, sorry, and this is on a 00 level on that piece there. Room to the left, last time price was there on this Doji, which we'll go through 2 bars ago. And again, price continues to fall. I personally wouldn't have liked this trade, and I probably would have taken it but risked a lot less, only because I wanted, there's not much of a retracement over here, but again we do have a double top forming as well to go down, so there's some confluence there. I would have taken the trade, but I probably would have risked a bit less than my standard 2% per trade, or whatever your standard is. So hopefully that gives you some good examples using the pin bar with the trend. And this one here is a beautiful textbook example of a counter trend, and hopefully we'll hone in the kind of room to the left. So you can see here that we've got a very, very big pin bar. And as you remember from the settings, it will only print if the pin bar is bigger than the previous 4 candles. And you can see here, it's probably bigger than a lot more than 4 candles. Probably this big one over here, that's probably bigger than that. It's probably a long time since price made a candle this kind of big in its range. So we've got a massive candle. The last time the top 5% of that wick was in, and this is an hourly time frame, 13,826 hours ago, and when you divide that by 24, it's like circa 55 days. So price hasn't been in that range for nearly 2 months, and for the hourly time frame, that is a long time. Yeah, so we've got a massive candle, a massive rejection candle. We've got price not being at that level for nearly 2 months, and again, look where it's printed. It is printed on a 00 number level, so it's rejected that level. Price has rejected that level twice already. Again, think about support and resistance. Strong reversal, strong reversal. And then you got this pin bar rejection at the round number level, where prices reverse strongly at those two levels. And look what happened on that next preceding bar. I don't know how many pips that is, but almost as big as that rejection candle, and then price continues to fall from there. So hopefully you can see how powerful it is, and not all pin bar counter trends are all going to be as clean as this, but hopefully when you get the signal and you go to the chart, you start looking at these things. So I only trade pin bars that are on round number levels. That's just my rule. That's how I trade. So again, you can take that philosophy and cut down a lot of the signals, because you'll get pin bars all over the place. Yeah, especially when you take off the MA filter as well. So again, it's so powerful, this particular pin bar strategy, and it works really, really well. And I really hope that it's kind of made sense. And check out the link in the description, which goes into the pin bar in a lot more details in terms of the formation. There's some other hidden kind of rules in terms of the formation around how big the body needs to be. The body needs to be engulfed by the previous bar, which I don't go through. Again, this is a crash course of going into it at a very high level. And again, in the description, there's all the detailed videos to go into these certain points, to really hone that in. So again, I really hope that you've enjoyed the pin bar, the rejection candle. We're then going to go into part 3 now. Hopefully the thumbnail's on the screen, about the engulfing bar, which is the reversal candlestick pattern. And click on that thumbnail now, and I shall see you guys in a second in part 3.